Hello, my name's Iggy Tan. I'm the Executive Chairman of Lithium Universe. Today I want to talk to you about the positive placement we've just announced and to give you a detailed presentation of our strategy. But before I do that, I know some of you are probably asking why we're raising now. Well, it's simple, momentum. What we see in the market is that the lithium prices bottom out and we're starting to see very green shoots from the lithium industry. And so companies that are in a position that can benefit for it, like ours, will come out of the blocks very strongly when this price recovers. So in just a year since listing, our experienced team has delivered a very positive pre-feasibility study for the Bécancour Lithium Refinery. And what we want to do is carry on that momentum by finishing a definitive feasibility study. So we believe that in the next quarter we'll be able to deliver that DFS and then move to the critical stages of funding the project. We are in very exciting discussions with major OEMs and potential strategic partners that will come in and help fund this project and close the lithium gap in North America. All our existing shareholders, we like to assure you we appreciate the support that you've shown investing in Lithium Universe. And we want you to continue this exciting journey with us, as we'll be releasing an entitlement rights offer to allow you to participate on the same terms as the placement. So with that, let's talk about our lithium strategy. Now, on the upstream side, the mine supply, there's something like 40 companies just in Quebec developing resources. So there's nearly 500 million tons at greater than 1% of resource. And also, when you look at transatlantic supply, you have spodumene supply potentially coming from Brazil, Africa, and Canada. Now, if you look at the downstream side, there are something like 20 manufacturers of battery plants announcing projects in the US. It's nearly 1,000 gigawatts of battery capacity to be on stream by 2028. If you calculate the amount of lithium carbonate required for that, that's nearly 850,000 tons per annum of lithium carbonate every year. And what we see, if you're a spodumene producer today, you would have to ship your spodumene all the way to China, costing you maybe $70 a ton, or an equivalent of $600 a ton of lithium carbonate, and that's got to be shipped back to the North American region. Now, we also see a lot of government action in this area. The US government and Canada has started to cut the reliance on Chinese battery supply. Chinese firms have been ordered to exit from Canadian companies, and the US and Canada are putting in tariffs of Chinese chemicals of 25% starting this year. So the Canadian developers need to have downstream solutions. Now, if you look at the midstream, there are no current lithium converters in North America. Only 100,000 tons per annum of converters have been announced. Whether they get up and running is another story, but there is currently no lithium refining experience in the North American market today. So our strategy is to close this lithium conversion gap. Now, closing the gap is not an easy thing. There are problems with that because the lithium industry is a complex chemical business. There have been many failures and technical difficulties, and these are happening with current lithium producers. They're not even new entrants to the market. And we believe there are two problems in this area. Number one is using proven technology, and number two is experienced operators. As I mentioned, the industry is a very young industry, and there's not a lot of experienced operators in the hard rock lithium conversion area. Just a bit of my background. I ran Greenbushes in 1995 and commissioned the first lithium carbonate plant in Australia in 1995. I guess I'm best known for Galaxy Resources, where we built the Mount Cattlin operation at 100 37,000 tons per annum. We've built the Jiangsu lithium carbonate plant, rated at 17,000 tons per annum. And I guess we were known as the first large-scale integrated mine-to-refinery project. And like all companies, when Galaxy started, our market cap was less than 10 million. And when it merged with Orocobre, it was worth 2.5 billion. So joining me on our team is Pat Scallon. He's a veteran of Greenbushes. He's operated Greenbushes for the last 30 years. And he took this operation from 200,000 tons per annum to close to 1.6 million tons per annum. As you know, Greenbushes is one of the largest operations of spodumene in the world and the highest grade. Also joining me is Dr. Jinwan Liu. He was my right-hand man at the Jiangsu lithium carbonate operation. I guess he's known today as one of the worldwide experts in lithium refining. He's been a consultant for nearly 20 projects around the world, and he is part of the team that delivered this project. This is the 1992 Dream Team, one of the famous Dream Teams, and we have a version of our own Dream Team, which is called the Lithium Dream Team. So joining us as well is Terry Stark, who is General Manager at Galaxy Resources, Roger Pover, who ran the Mount Cattlin operation, John Loxton, who's head of Lithium Refinery. He was part of the Hatch team that built the Jiangsu lithium carbonate plant. And John Cebulski, who was also the CFO for Galaxy Resources and was involved in the fundraising and development of these projects as well. Now, I mentioned about the failed projects around the world. Some of the examples of this is Canada Lithium or North American Lithium. They started in 2014, and basically by 2015 they only produced about 100 tons of lithium carbonate and essentially went into Chapter 11. Nemaska Lithium, very similar story, really failed to start up in 2019. Also looking close to our home in Perth, Western Australia, we have Tianqi and LGO Kwinana lithium hydroxide plant. It's been going for 8 years. There have been a capital cost blowout of more than $1 billion. And the basic plant doesn't operate more than 10% of design. So a big problem there. Albemarle Kemerton lithium hydroxide plant, they've announced they've been going for 5 years now. They recently announced the shutdown of trains 2, 3, and 4. And the current train 1 is only operating less than 20% of design. So they suffered a massive write-down of $1.5 billion US. And then we've also seen a lot of companies using new technology. It's the alkaline pressure leach process. This was actually the technology that they used in Greenbushes in 1995. It's essentially new technology, unproven, and we had a lot of problems in 1995 because of massive scaling. So in our minds, this is also another unproven project. A lot of people have asked us, why have these projects failed? When you talk about lithium companies spending billions of dollars, our view is that there's a lack of operating supervision at the design stage. So these companies tend to give it to engineering companies to design, and they would put in a lot of equipment that they believe is a good idea, but essentially from an operator point of view, experience shows those things don't work. The other issue is that a lot of these plants are trying to convert Chinese technology, which tends to be a batch process, to a Western continuous processing technology. And that translation has caused a lot of problems. So in essence, what we're doing is we were fortunate to have a very good plant that we built in Jiangsu, the Jiangsu lithium carbonate plant. It uses Western style continuous processing. So it's not the batch style. It's designed to international standards. And as you can see here, a lot of automation that we put in 12 years ago, which is actually, This plant is essentially the benchmark for most refineries around the world. What we did at Jiangsu, just to show you what the dream team did in Jiangsu, is we went from groundbreaking, construction, and project completion within 2 years. And today the plant is operating at well above design rates. So the design of the plant is 17,000 tons per annum. This plant is operating at 20,000 tons per annum, probably producing the best lithium carbonate in the world today. So to resolve the technical risks that we see around the world, essentially what we're trying to do is simply replicating the success at Jiangsu. Essentially, we're using the same flow sheet, the same equipment, and the same suppliers. And I'll give you an example. We went back to the same supplier that's produced our kiln, and we said, you know, the kiln that you produced for us 15 years ago, we want exactly the same kiln. And they said, sure. We even have the construction drawings for it. So that means essentially we're taking the same design and getting it priced in today's terms in Canada. We're building a 18,270 ton per annum battery grade lithium carbonate plant. The product will be essentially a green product because we are using hydropower, green hydropower. And so we're located in the Bécancour region of Quebec, commonly known as the battery hub. A couple of weeks ago, we announced a very strong and positive, robust pre-feasibility study. So you're probably listening to me and saying, why are we building a plant in such a depressed pricing environment? Why are we building a plant when others are closing theirs down? Why do we think we can compete with China? And then finally, why are we building a lithium carbonate plant when other plants are hydroxide plants? So the first question is, why are we building this plant in such a depressed pricing environment? We have a counter-cyclical strategy. I've been through this lithium cycle maybe 3 or 4 times. I can guarantee you that the price have and will always recover. I guess when you're in a low pricing environment, you think it'll never recover, but it will recover. The difference today is that the lithium demand is not only driven by the EV industry, it's also driven by the grid storage industry. So there are very strong growth in EVs and demand that hasn't really changed since the price has dropped. The depressed prices is due to the oversupply when the price of lithium got up to $70,000 a ton. So the companies that develop these projects in this low pricing environment will benefit. So when the price takes off, we believe that our company will be first out of the blocks. The other thing is that new capacity is required. Well, there is because there is plants that have been shut down at high cost operations have been shut down. Operations that are not performing have all been shut down. You need new capacity to meet this demand. We need new non-Chinese conversion capacity, and the technology that we have is proven, and location is the key. So let's talk about the Quebec lithium conversion capital. We believe that Quebec will be the conversion capital that will compete with China. Why? It's because we can access cheap hydropower. As I mentioned, around 2.6 cents a kilowatt hour. If you compare the power in other parts of Canada and even the US, it's nearly 5 times cheaper. The other thing is that we have access to nearby feedstock from Canada, Brazil, and Africa. This feedstock doesn't make any sense to go all the way to China to be converted and back to the North American market. Finally, I mentioned the tariffs, 25% tariffs from lithium chemicals coming from China. And if you take all that, the end market being in America, we have a big cost advantage. So in this slide, I show you that roughly Chinese conversion costs is estimated at $3,250 US a ton. It ranges from 3,000 to 3,000 to 3,500, but we use an average of 3,250. If you add the transport cost impact, that's another $600 a ton of lithium carbonate. If you add the 25% tariff, that's another $960 US a ton. If you add all that up, we're still 15% cheaper than that Chinese conversion. A lot of people ask us, why are we building a lithium carbonate plant and not a hydroxide plant? Because there are hydroxide plants popping up everywhere. Well, number one, we have a proven track record in lithium carbonate, so we want to stick at what we're good at. Number two, a lot of people don't realize that lithium carbonate is the feedstock for LFP batteries, or lithium iron phosphate batteries. Now, lithium hydroxide is the feedstock for NMC type batteries, more powerful batteries. But what we see in the EV industry is there is a migration to LFP batteries. So a lot of the EV cars are now going to LFP batteries. A lot of the grid storage batteries are going to LFP batteries. So lithium carbonate demand, even today, 23-24, is at 67% of the balance. So there's a big conversion from hydroxide to lithium carbonate. So we're in a great position where we have a proven plant that does carbonate, and I believe some of the lithium converters in China are trying to convert their plants from hydroxide to carbonate to meet this demand. So essentially where we are in Canada is on the St. Lawrence River in Bécancour. And the beauty of this site is that it's in an industrial site. We have many industries around us. We have access to natural gas, hydroelectricity, highways, and also we have a railway line at the back of our plot. But the most important thing is that we have a port nearby that we can ship 30,000 tons per annum per shipment of spodumene supplies. What it means is that we're not tied into Canada, where the Canada spodumene market is developing. We can access spodumene from all parts of the world, Brazil, Africa, and so on. So essentially, we could be a hub of this transatlantic supply. Here's the flow sheet of how we're going to produce this carbonate, exactly the same as the Jiangsu flow sheet. We are the only company that will publicize our flow sheet. But one of the important things that we put in our flow sheet when we did 15 years ago is a purification plant at the back end that purifies the lithium carbonate to battery grade and beyond. So we can produce 99.5%, which is battery grade, but we can also produce much higher grades at 99.9%. This is the design of the plant, essentially the same design that we did at Jiangsu. We had to rejig a bit of it to put it into buildings to winterize it. As you know, Quebec is a very cold area, and we had to make sure the design is winterized. But essentially, everything's the same flow sheet, same equipment, and even same suppliers, really to take that risk out. The other way we manage the risk to make sure that the design that we have is robust. It should be able to handle spodumene from any parts of the world. We essentially bought spodumene samples from around the world, and we process it in the laboratory to simulate our plant. The work was done by Linear University, one of the leading lithium research centers around the world. And you can see from this video here, you can see the many different spodumene samples that we process it through with different sizing and different impurity levels. What we can say that every one of those produces battery grade without any problems. On the site itself, we have done a lot of work there. The application for hydropower, 22.5 megawatts of power, is in process. We've done the environmental survey to make sure there are no showstoppers on the environmental side. We have a cooperation with the First Nation group, and essentially the permitting process is well underway. Now, let me talk about these PFS numbers that we did. One of the first things we did was try to stress the project under these current low pricing environments. So, for example, we use a spodumene price of $1,170 a ton. You can see here the red line. It's a very low number. We didn't take in all the highs that we saw in the last few years. And lithium carbonate price, we use $20,970 a ton. Again, the red line here shows that we didn't pick up all the prices, the high prices in the last 3 years. So very conservative pricing. As I mentioned, the net present value for the project is 779 million, very strong NPV. The payback for the project is 3.5 years. Now, of course, a lot of projects have a high NPV. It's about the management and the ability to execute a project, and also the technology that the company is using. The EBITDA for the project is 147 million US dollars per annum. It generates an EBITDA. The capex is 494 US capex. The common question we get is, how do you fund this capex when your market cap is 15 million? My first answer is that every large company starts with a low market cap. The Fortescues, the Northern Star, even Galaxy started with a 3 cent stock. What we're going to do here, how to finance this, is essentially we're going to sell 49% of the project and to bring in 1 or 2 strategic partners. So by selling 49% of the project and bringing 1 or 2 strategic partners, they would inject equity into the project. One of those partners could be an OEM with already spodumene offtake. So I'll give you some examples. Some of the big OEMs have already spodumene offtake. For example, Ford has offtake from Liontown. LG has offtake from Liontown. General Motors have offtake in Canada with Piedmont. Mitsui has offtake in Brazil, and so on. Where do they convert that offtake today? The option to go and convert it into China is no longer there due to government action and tariffs. They have to find a company like us that has the expertise in lithium conversion. So where we are today is that now that we have finished the PFS, we are advancing very quickly to the DFS. Our discussions with strategic investors is continuing as we speak. We have offtake discussions with potential OEMs. That's continuing. The project permitting continues while we carry on with this project. And I mentioned to you the funding plan previously is well underway. So, ladies and gentlemen, I wanted to leave you with 3 points. To resolve the technology risk that we've seen around the world and the gap that is around the world, there are 2 issues that you have to resolve. And the first one is lithium experience. So we've gathered together the most hard rock lithium conversion experience in one company, which we call the Lithium Dream Team. Number 2 is technology. We are not trying to be smart about technology. We know that what we built in Jiangsu works, and essentially we're using that technology and replicating that success. And thirdly, location is the most important. Location that can allow you to compete with Chinese conversion. We believe that's Quebec. Essentially, you access cheap hydropower. You're very close to all the mines in the North American sector. And secondly, the end market is the North American sector. And because of these tariffs that are coming for Chinese conversion, we could be 15% cheaper than that Chinese conversion. So thank you very much, ladies and gentlemen, and thank you for joining us in our lithium journey.